Thank you, everybody, for joining us back here at Nubeva's channel. We're sitting here once again with special guest, CMO and Head of Product, Mr. Steve Perkins. Steve, thank you for subbing in for Randy today, but it's been a little bit since we got to chat with you. How are you holding up?
Things are great. I mean, the weather's obviously crazy here on the West Coast. Business is busier than heck. Randy's out traveling. He asked me to sit in here, but things are good. Things are really good.
Good. Glad to hear it. Last time I chatted with Randy here in Ohio, it was nice and warm, and you guys were getting kind of hit hard out there out west. But now, once again, it's snowing here too, so I don't really have much positive to say about the weather either. But listen, let's start off with this quarter, man, because this was really, really exciting. Congratulations.
Yeah, well, we're really pleased with our results. You know, if you look at our revenues in the first 3 quarters of this fiscal year against the prior year, we're up over 880%. And on a 3-month basis, year over year, we're up over 1,600%. So our revenues are definitely looking good. People can go and read the details in our filing, but on a cash flow basis, we are strong both in terms of cash in as well as our cash position. We've got our spending under control. Our pipeline looks pretty good moving forward, and we've got a lot of operating leverage in our model. So we feel really good about it. I do want to emphasize, though, that as rosy as that sounds, we are, of course, in very strange economic times. With the banking situation and with looming talks of recession and inflation, et cetera. And we are in a very highly dynamic marketplace or industry, that being ransomware. It's not like they're sitting still. So that said, we feel very good about where we're at.
Yeah, I mean, things have definitely been weird lately, but these numbers kind of speak for themselves. And what's interesting is people have been asking a lot of questions and even making some incorrect assumptions about Nubeva's revenue model. So can you kind of set the record straight right now on what is the revenue model?
Yeah. So look, we sell a software subscription service. So it's software and people subscribe to it on an annual basis. So that we sign and sell annual contracts to license our software and support services with it. And typically it's minimum of 1 year. And typically we shoot for 3-year agreements. Now with that, that does not mean that maps necessarily to revenue nor to cash flow. We'll cover that in a second. I do want to cover one other thing. We also occasionally will sign agreements that have a deferred cost for decryption, meaning they pay a smaller fee to put the software in. And then if they get ransomed, then we charge a larger fee later when they need it to decrypt. Now, none of that latter fee can count, not from a GAAP perspective, from a cash flow planning perspective. That's all potential upside. But when we talk about bookings, it is about assured cash coming in the door around signed agreements. Mm-hmm. Now, let me add on to that. I know this is kind of basics, but just to set further, as you said, set the record straight. Okay, so those are our contracts, a 1-year agreement. Okay, our job then is to satisfy the customer during that contract period so that they renew. And so if we do a good job, every contract we sign renews and they stack. So we enter next year, and every sale that we sell next year actually ideally is accretive or additive to what we had this year. And therefore, our business model grows and the tide rises. So that is the basis, like any annual recurring revenue model business and the majority of the software industry today. Now, I do also want to make a very clear specification here or detailed call out. That does not necessarily, signed contracts is different than revenue, is different than cash flow. And I know many of you know this, but just to be abundantly clear, if I sold you, Michael, a contract for $12, GAAP typically says that I can only recognize $1 per month over the course of a year. Mm-hmm. And I recognize it in arrears. So at the end of the first month, I can recognize $1. At the end of the second month, I can recognize another $1. So the revenues that we show on our financials typically have a deferred revenue component as well as the GAAP accountable revenue for the current recognizable periods. And there's a schedule that gets laid out based off of the terms of the contract. Now, that's also separate from cash flow. Typically, if I sold you that 12-year contract for the year, I would ask for all $12 up front. Now, the last part of that is that just because you and I signed agreement today doesn't mean we start today. You may say, Steve, I want to start next month. So just so that we're clear, so we have three elements. We have signed agreements that bind you to me and commit you to me. We have cash flow that actually operates the business, and then we have a lagging and growing revenue base
Mm.
out of a deferred pool as we continue to execute. And if, like I said, if we do our job well, you renew, and then our next sale next year stacks on top of yours, and our business grows and has a high leveraging model and element to it.
Yeah, that makes perfect sense. Thank you for walking through that. As I said, there's definitely been lots of chatter about what's going on, so people should appreciate this walkthrough. We also
Yeah.
appreciate the questions, guys. So if you have any, please don't be afraid to keep sending them in. But kind of turning to what you had said near the end there, you guys have made a number of announcements about sales in the past few months. So can you kind of put those into context with your guys' revenue model?
Yeah. Now I can only say so much because all of our agreements, it turns out, are coming in with confidentiality. And in fact, we're starting to recognize that we need to embrace that as a strategy with our customers, which is we will maintain confidentiality around you purchasing us, since that seems to be where everyone goes. So that said, here's what I can say. So we've made a number of announcements about, let's just start here. There's been a number of announcements since December about seven-figure multi-year contracts. Okay. So let's just break that down. We've signed an agreement, or let's say there's been three of those, I believe. There's been three agreements talking about seven figures per year for at least 3 years. So if you do the math, that's over $3 million per year has been signed for 3 years. So that would be over $9 million worth of signed contracts, over into eight figures if you're looking at Canadian dollars. We have a lot of Canadian investors to just help you out there. And then yeah, so that's the basis of that. And the revenue will tick as the months and the years go on. The cash flow will flow varying based off of the terms. Sometimes customers do ask for quarterly payments. Once in a while, they ask for monthly payments.
Mhm.
But that helpfully decodes that and puts that in the context.
Yeah, for sure. And you had also mentioned cash flow there. You had made a press release about that. Can you elaborate on that?
Yeah, I mean, basically the first week of this year, based off the signed agreements that we had entering the calendar year, and that's important. Based off of the signed agreements we foresaw that with our current burn rate, we would be cash flow positive for the 12 months of 2023, calendar 2023. So that when we exit the year, we will have equal or more cash flow based off of the current operating plan.
Mhm.
Now, it turns out that we're either super smart or just super conservative or timing or lucky or whatever. But if you look at the economic times we're in, where we're looking at uncertainty around access to cash flow, if we had been on a let's burn it as fast as we can to just build it and hope they will come, we didn't think that that was the right strategy. Instead, we've been taking a very conservative approach to growth and investment. So what that also means is, and we in that announcement we said we don't plan to raise incremental capital at this time. And that is because we don't want to A, over dilute our investors and our shareholders, and B, we see our ability to grow out of our own proceeds conservatively. Now, if we see a solid return on investment, we certainly will seek incremental growth capital. But right now, our plan and our announcement was we look good on cash. We feel that we're actually going to be in a solid position exiting the year. And we think that, as a young company, our number one job is ensuring financial stability and then growth, right? And we think we've achieved that for the time being.
Yeah, I think the significance of this is basically pointing to the fact that you guys aren't raising capital, which investors would be very happy to hear. And we're essentially seeing the fruits of your labors coming across now, correct?
Yeah, yeah. I mean, that's it. And if you look at the financials we just released, you saw the first few ticks and the first couple tranches of cash starting to come in for those contracts, and those will continue. And provided we continue to execute, we'll stack more sales on that, and it will grow from there.
Perfect. And so, like 2023, we're about a quarter of the way through it now. What can you say about the outlook for the rest of this year and beyond that?
Well, as you know, we have to be very cautious here because we are in fairly uncertain times, and we are still a young company with a really revolutionary technology that our fundamental marketing challenges. There's no category for us. We fit in between categories, and as a result, people don't always know how to budget for us. They don't know how to think about us, even though we have extreme value. So we're figuring out this product market fit. I think that's the first important point to just help everybody really understand. Um, but that said, let me kind of take you on where we've been and now what we're doing and focused on moving forward. So when we first introduced this and started selling it last Q1, calendar Q1 of last year, we would take a meeting with anybody.
Mhm.
And small companies, large companies, managed service providers, manufacturers, security industry manufacturers, whatever it was. And what we found is initially small to medium sized companies and governments were buying this quickly. And we weren't certain if big companies would bite. Now, if you think about it, sales cycles in enterprise software in general are typically, most people think of 9 months ish, plus or minus. It's you've got budget years, right? Walking in and saying, hey, you didn't budget for me, buy me. So people say, I'm interested, I got a budget for next year, whatever it might be. Smaller companies are more nimble, big companies not so. And we weren't certain if we'd be able to execute on big companies. Well, by the announcements that we've made, it's clear that we can execute on larger companies.
Yeah.
So for the time being, our plan is now moving into the new year is to focus on big game hunting. We know we can do it. The proceeds and the profitability and the productivity based off of our size of team seems to make more sense from a go-to-market execution. Certainly, like I said, the profitability is there, but what it means is necessarily a slightly longer sales cycle and more lumpy, sizable business, right? It's going to bounce, but be big lumps as we go along here and there versus a steady trickle that goes like this. We may add the latter back into our operating model in a future date, but not right now. We're big game hunters. And so given that, right now, we have a good number of large deals and large opportunities in our pipeline, enough to easily support over 2x growth from what we've done so far. I do want to caution everybody that you never close everything in your pipeline. Right. Deals slip, et cetera, et cetera. So our job is to get better at qualifying that pipeline and disqualifying that pipeline and also growing it. So anything can happen on that. But when we say we feel good about our pipeline, it is that we can see deals that can contribute to significant growth from where we are. Now we have to close on them and the like, as I just mentioned, but that feels pretty good. Part of my job is driving the team and the initiatives to make sure that that continues to grow so that we have more and more pipeline. Somebody once told me the best deodorant is pipeline when it comes to selling. So that's our goal.
Yeah, fair enough. It has been interesting because, as you said previously, that wasn't really who you were targeting, and but now you guys have landed a few, as you had mentioned, the 7 figures, the confidentiality agreements. It definitely makes sense, and that seems like a great area to focus, honestly. And so from there, like, what about OEM deals or this idea of like maybe even licensing or white labeling your guys' ransomware solution to like other bigger companies to like kind of package in with their
Yeah.
offerings?
Yeah. When we first brought this to market, that was our first strategy is why would we build a distribution model and a distribution platform when other people have it? Let's just take this technology, license it to other people, let them embed it. Funny thing happened on the way to market. Most of we had a lot of conversations, and what we overwhelmingly heard was, "This sounds too good to be true. I needed to be proven in the market before I move forward." All right, now think about it. You're a big company. You've got a brand. You've got a momentum and energy around your product set. And I come in and say, "Hey, I've got this attachment that you can have. It's totally different than anything you've ever thought of, but it could be a game changer for you." And your answer is, "Well, before I mobilize my company, I need to see that this is real." So you go out and sell that for a while, and then let's chat in a year. So
Mhm.
we had a good number of those conversations. Some people passed and said doesn't fit our model. Other people have said, yeah, that's interesting. Come back to me with a year or so worth of proof points, and then let's talk. And that's where we are. We've got a good number of those conversations. I think are kind of on the sideline,
Yeah.
and we'll continue to pursue those because they represent good business opportunities for the right kind of deal.
Yeah, and it makes sense. It harkens back to what you had just said a couple minutes ago about larger businesses kind of have to play a little more conservative. Smaller businesses can
Yeah.
afford to be a lot more nimble. And you guys essentially tackled this yourself, and you're coming out the other side looking pretty good right now. And I'm sure those people would potentially be singing a different tune today than they were previously. But kind of switching gears, as you guys have evolved a lot over the years here. Looking back at your guys' your TLS product, have you guys canceled the customers you guys have had previously with that? People were kind
No.
of asking about that still.
Yeah, no, no, we haven't abandoned it at all. But I will point out that if anybody's, we've had a number of people asking that, and I know there's been chatter. If you go back, we made an announcement when we realized we had this capability for ransomware and decided to bring it to market. We told the market, I believe, in a press release, that we were going to defocus our outbound efforts from TLS to ransomware, that we saw it as a much greater return on investment and value creation opportunity for our constituents.
Mhm.
So we have not abandoned it. We have customers that have it, that use it. There's still some growth opportunities in those. We have a steady stream and trickle of people knocking on our door about it without even trying to market it. We're being very judicious about what we take on because we have limited resources, and 99% of it is all focused on outbound growth on the ransomware front. Now that said, so we are still servicing those customers, and we do have some pipeline that's happening there. I do want to point out the technology we have found is actually becoming more and more relevant. Kind of tying it back into ransomware is that one of the problems when people with ransomware, there's a thing called double extortion. They'll not only encrypt your files, but they'll also steal a bunch of your data out the back door while you're not looking and saying, "Hey, I'll release this if you don't pay." Our view is that how do you ever expect to stop data from leaking if you don't decrypt and inspect it all?
Yeah.
And so that's a longer term story because we need business partners to make that execute, et cetera. So we feel that IP, the intellectual property there, is still extremely valuable, but the higher return on investment for execution right now is on ransomware.
Yeah, yeah, it makes sense. And Steve, honestly, you've came on and answered a lot of questions that people had been asking for a very long time. And again, everyone, we do encourage you to continue sending those in. But Steve, is there anything else that you would want to add before we go?
Yeah, probably a couple things. I know we've got a lot of investors that and a steady stream of questions that come in daily, sometimes much more often than daily. And I just we will do our best to answer questions to the extent that we can. But there's two things to keep in mind in that. One is that when our business still is and our go to market is adapting as we are, it's very difficult for us to answer some of the questions, especially questions about, hey, what are leading indicators of performance, especially in big game hunting when we have lumpiness, et cetera. We'll try to do a better job of communicating like this periodically when we have certainty that we can be communicating with without taking you out on a limb that might change. That's number one. Number two, just bear in mind with your aggressiveness of wanting to learn information, um, just know that we're a small team. And actually, if there's too much of it, it actually affects our productivity. In fact, we recently had some very aggressive investors who are trying to learn information sit in on sales webinars, and we're asking investor questions on sales webinars, actually even getting names of people who are on it and sharing those names out on the chat boards. That will materially people hurt our business if you do that. Please be respectful that we're trying to grow our business. I know you want to know information. If we can give it to you, we will. If we can't, please respect that.
Well said, Steve. Well
Yeah.
said. Well, thank you again for joining us here today. It's a pleasure catching up with you, and I look forward to the next time we can share some more information with people. Closing words from you?
Yeah, I just, we're very proud of what we've done. We think that we had obviously a great last quarter. We think the outlook is solid and strong. We're proud of our team. We're thankful for our partners and our investors for sticking with us and taking this journey with us. We're working every day. We've got the right incentives in place to work every day to create value for everybody involved. And I would be remiss if I didn't do a shameless plug for sales. If any of you out there are compelled with what we do, the ransomware problem is not going away. We provide a very unique and compelling solution. Take us into your friends, your businesses, et cetera. Help us get to the table. Our biggest problem is that people think we're too good to be true. And if you can help us get to a trusted conversation where we can prove what we can do, it'll help us all.